speech from the governor of the ECCB. Financial Information Month is a program which is done throughout the ECCU, that is the 8 countries that use the EC dollar. And in Dominica, we have at least 26 partners for Financial Information Month 2023. I will run through them because the partners going to need their little credit. So of course, ECCB, University of the West Indies, Republic Bank, National Bank of Dominica, NDFD, Sagicor, Insurance Company of the West Indies, Central Cooperative Credit Union, Dominica Social Security, National Cooperative Credit Union, Pan American Life, Nagico, Domlec, Dowasco, Dominica Cooperative Societies League, the Aid Bank, Shopee, COPEF, West Coast Credit Union. So that's our 2 new partners for 2023, COPEF and West Coast Credit Union. In-kind partners, we have DAIC, Finance Focus, Jolly's Pharmacy, GIS, National Youth Council, Digicel, and Dominica Youth Business Trust. So what are we going to talk about for Financial Information Month 2023? Our theme this year is wealth creation for financial resilience. And when we talk about creating wealth and financial resilience, we want to be able to leave something for the generations to come. So for our children and for our grandchildren and even for ourselves throughout, including our elderly years. Now, financial resilience, there are things that will happen which are beyond our control. So we have disasters and epidemics and all of these things are beyond our control, but we must have some money set aside for us to be able to deal with them when they occur. And of course, we have our own man-made disasters when we have shootings and so on. So these are man-made disasters. So that's what we want to talk about for this year, wealth creation for financial resilience. And we have 3 sub-themes. So our 3 sub-themes: plan for tomorrow. Matt, you have to plan for tomorrow. Invest little by little. That's another sub-theme. And time is money. Like you just make me lose a big money there because you're 5 minutes late. So time is money. So these are the sub-themes for Financial Information Month 2023. Now, what are we going to do this year? We have a few activities planned in October. We have our annual primary school workshop. Usually we would go to a primary school in Dominica and we have a set program that we would do with them, and we would also make a small donation to this school, a small donation in kind. This year we selected Maho, Campbell, and Warner Primary. And why are we doing these 3 schools? When we checked Warner Primary, their school is a very small school. Campbell is also a very small school. And so we decided we will bring the students from both schools to Maho Primary. Maho Primary is a newly constructed school. They have a large enough auditorium. So we will bring the students from grade 4, 5, and 6 to Maho Primary. And so we are doing 3 schools at one session. We will also make an in-kind donation to each of the schools. So some of the schools, they have already indicated what it is they would like for the in-kind donation. Some would probably want a fan or some copy paper, manila sheet, toner. So whatever it is they ask for, within budget, of course, we will provide to them. So that's what we'll be doing. Of course, you will be hearing financial tips on all radio stations. So Q95, DBS, Kyrie will have financial tips throughout October. Another activity we'll be having next week, Tuesday, that's the 10th at 6 p.m. We are going to do 30-minute discussions. So 3 sets of 30-minute discussions with our partners, and we will bring that to the public via MO News. So the partners will be speaking about the different products and services that they're offering. We will give the general public an opportunity to ask questions, and we will try our best to answer these questions. Another highlight of Financial Information Month this October, next week, Thursday at 6:30 p.m. to 8:30 p.m., we are going to the town of Portsmouth. The second town will be at the Central Cooperative Credit Union conference room or the hall. And we will be inviting the people from Portsmouth and environs to come in to that session. We will have as many of our partners as possible, the commercial banks, the credit unions, the insurance companies. So we will have them in, and we will be giving the people of the North an opportunity to interact with our partners. You know, sometimes you do not have time to come to town, you have questions, you probably say when you call, they're not answering, and then you just forget about it. So the people from the North, that's an opportunity you're going to have. Next week, Thursday, the 12th, at 6:30 to 8:30, come to the hall, to the Central Cooperative Credit Union Hall, and get an opportunity to meet the employees of the different companies. So if you have an insurance company with any of our insurance policy, with any of our partners, you get an opportunity to interact with them one-on-one. So the partners will make a 5-minute presentation, but we want it to be more of an informal meeting, because many times when you do the town hall sessions, there are people who are present, but they are not comfortable asking questions. Not everybody likes to ask questions aloud. So we are going to give them that opportunity to interact with the employees of the bank, ask what questions you want to ask, and get a direct answer. If you want a name and number that you can contact directly, this is your opportunity to network and to know, put a face to a name. We will be having radio programs on each of the radio stations. So the general public, they're encouraged to tune in, listen to the programs, participate, call in, ask your questions. Because we are going to Portsmouth, we chose also to make a small financial donation to the Grange Home for the Elderly in Portsmouth. So we come into Portsmouth, we're giving back to an organization in Portsmouth. And of course, every year we do make a small financial contribution to the Dominica Cancer Society. They're a fixture on our donation list. So we will be partnering with them. We will be doing the walk with Dominica Cancer Society this coming Saturday. And we would like to encourage the general public to join us in that walk, and we'll be making that contribution to them. You're here, Matt? You're hearing me? Okay, so I guess I can go on. Now, what I would like to encourage the general public to do. Yes, we talk about Financial Information Month, but it's an opportunity as we come towards the end of the year to try your best to put your finances in order, put your finances together. So you might want to, and these topics never grow old. When we talk about budget, you need to be able to create your budget, know where your money is going, assign each penny that you make to an expense or to a savings. And I'm always saying that when you get your money at the end of the week or at the end of the month, your first expense should be your savings. Your first deduction should be your savings. So we want to encourage people to save. We want to encourage them to invest. And I know a lot of people say, what is there to invest? But we also have the Eastern Caribbean Securities Exchange. So that is a way you can invest. Another thing we'll be doing for Financial Information Month, one of the discussion will be the ECCPCGC, which is the Eastern Caribbean Partial Credit Guarantee Scheme, where persons who come in, and that's why it's important to have your financials in order. Because if you qualify for the Eastern Caribbean Partial Credit Guarantee Scheme, you can actually get 75% of your loan guaranteed by the ECPCGC. So we are going to have a discussion on that. And we're really hoping that people will listen, they will start putting their finances in order. We
Can I
also
ask a
have, when we
question,
talk
Shema?
about,
Sure. Can I ask a question?
of course, Matt. Of course,
Shema,
Matt.
I just you spoke about saving. What is the formula? I mean, some
Mhm.
people make a lot more money than others. Some people make $500, $600. What is the formula to saving? Somebody wants to save how much money from their salary.
Matt,
It doesn't really matter how
I'm
much. But
always
yeah.
saying, Matt is not about how much money you make, because I am seeing right before me that there are people who are messengers with government. There are people who are junior clerk, and they're handling and managing their money much better than people in the higher category of workers, people that are getting more money. But just to answer your question, whatever it is you're making, you need to try at least 10% of your salary. Try to save that. So if you're not making a lot of money, you're making $500 a month, try to put $50 aside. That would be your 10%. And if you're making $10,000, your 10% would be 1,000. The important thing is consistently saving that money every month. And when you save that money, you're saving for two reasons. You're saving one, for you to have an emergency fund, because at least you need to have 3 to 6 months salary saved. When you just start working, your first goal, it shouldn't be to buy a vehicle. It can be to buy a piece of land, but even before you reach there, you want to have an emergency fund. So if, for example, at the end of the month, your salary is $2,000, once you start working and once you decide to put that 10% aside, you are going to try to see if you can make 3 to 6 months. And I advocate for 6 months because 3 months goes by so fast. So if you can have 6 months salary saved, so that would be $12,000. If you're making $2,000, have that saved. You have that there on a savings that you do not touch. That is in case you lose your job, in case you have a medical emergency. Because even if you have insurance, many times if a medical emergency, you have to first use your own money first, and you have to use 20% of your money, even if you have insurance. So they will give you 80% coverage, but there's a 20% that you have to cover. So the first thing you should do, try to save at least 10% for those young people living at their parents' home. I know you can do more than the 10%. That's the best time of your life if you're living at your parents' home, where they cook, clean, wash, and bills are paid. You must contribute to your parents, and you must save at least 40% of your salary. You can do it unless you're furthering your education, which is an investment in yourself. So, Matt, you get the response to that. For
Yes, I
minimum 10% of your salary, when you're going towards 3 to 6%, 3 to 6 months salary saved. And it's only after you have that saved, you should be looking at other ventures. So, for
because
example,
there are
you want to further your
oftentimes you hear
education.
people say, "Boy, I make just a little bit of money. I'm making. What you expect me to say? What are they going to save on $500? You know, that's the kind of responses they
You have to
usually hear.
say, because remember, most times, not every time, but most times, you get paid based on your worth. And when I say worth, I'm talking about if you, for example, have a degree, or you do further studies, your pay might
Mhm.
reflect your qualifications and experience. If you're getting $500, it might just be because that is your market rate, right? But it doesn't mean you have to remain there. If you're getting $500, what you try to do is try to look at what other ways, what can you do to earn more money. So, for example, if you're doing brush cutting, or you're working for a company and they're only giving you $500, but once you finish work from 8 to 4, from 8 to 1, you have the rest of the hours in your day. So you can probably say, let me get a brush cutter, let me cut grass in my neighborhood, let me see how I can make money. And I always use, if persons who are very good in agriculture or they have manual strength, They can come and do beds for people, do people backyard gardening, like just start off the bed for them, and you can get paid for those things. So many times we really think, I want to work in an office, but I can tell you that there are many people who are doing skill work. They're electricians, they're builders, they're tile layers, they're doing carpentry, and they make much more money than the people used to be with their long sleeve and button down shirts and
That
going
is a
to
fact.
work,
That is a fact.
sitting
Yeah.
in an office. Yes, so it's really not about how much money you make. I mean, of course, the more you make, the more you figure you have at your disposal. But what I have seen is that the more money some people make, the more debt they get themselves into. So government just did a 6 to what 11 or 13% increase for some people. And that 6% you didn't have before, you should be using that 6% to do something worthwhile. So if, for example, you don't have an insurance, a health insurance, which is very important, you can say, now is the time, let me get a health insurance policy. You can say, I was doing without it, let me now save that money. So these are things you have to do, but to do that, you have to budget the money. Now we know the festive season is coming up and we want to be engaged in all activities. From last year, I started saving that money because I know I wanted to do the VIP. So I started saving that 150 a month and say that is towards. So these are things we can do, but you have to plan and you have to keep at it, keep to it. Right, Matt? So we just want to encourage the public to tune in, participate. Another topic that will never grow old is one called retirement planning. So it is very, very important that we plan for retirement. And you'll say, when I was 20, Matt, I was like, Moji, 20 years, retirement is still 60. That seems so far away. But imagine I'm approaching 50. I cannot even tell a person where the 30s and 40s went to. So look, I'm approaching 50. And then the other thing we have to remember, for most of us who are employed, we will leave the workforce at 60 years. But remember, if we are going to take Social Security at 60, we are going to get a reduced pension. That means we are going to get 30% less. So for many of us who would like our full pension, we might be opting for 65 to get money from Social Security at 65. But then what is going to happen to us between 60 and 65? These are questions we have to ask ourselves. And we have to plan while we are young. We have to plan, we have to invest. One of the investments many of us would have is what we call real estate. So many of us would probably have a downstairs that we can rent out, whether short term or long term. I would like to encourage people to have an additional source of income. I said you can have that income. You can do something online. If you have a skill, use your skill to make some money for yourself and start very young. So the young people, start all now to invest their money, to further your education, to learn a skill, to stay at your parents' house as long as you can so that you can save. So the day you decide I'm leaving home, you're not leaving home to go and pay Shema's mortgage. You're not leaving home to go and pay somebody else's mortgage. You're leaving home because you have saved enough money and now you're going to build, or you have built your own house. Okay, so the young people, I would like to encourage you, start young, have a plan. You must have a plan. And it is never too early to plan for your retirement, because every day and every year, there's a thing called inflation. Prices of things will increase. I am seeing it, building materials, things I used to buy for X amount of money. Now it is so much more expensive. Food, the prices of food, that too has increased. So we have to plan. There are some things that are beyond our control. So for example, when the pandemic hit us, that was beyond our control. When Maria came through, that was beyond us. But you know how some people could survive? Because they had their emergency savings. So they could dip into that and try to hold up. until everything regularizes itself. So plan, save, invest. That is what I would like to push out there. Time is money. We have some of our partners on board. Every month, people want to leave their workplace and go and pay their water bill, because they're all partners. Dowasco, go and pay Domleg, they want to go and pay Digicel. So even that, you do not have to do that. And employers, they need to be aware of what is available. An employee in 2023 should not have to be asking you for time off to go and pay Domleg and Dowasco and Digicel. They really shouldn't have to, because you can pay your monthly bills through pay. You can pay them with Mo Banking, NBD. You can pay them with Republic Banking. So you can pay them through the credit union. So you shouldn't have to be asking for time off, because productivity is very important. When you leave and you go and pay your bill, then I come to the office, they're going to tell me, oh, she's not there, she out for some time. So you shouldn't be out paying bills. Use the technology to pay your bills. Matthew wanted to ask me a question?
No, somebody just sent me a message earlier there that I thought I would read to you, because they say a lot of people get money through, like your workplace. They send your money straight to your account, but still then people, before you get there, it's actually finished because they don't leave the money there. They just spend. Somebody just
You
made
know
a
what
point.
what I would say to that. So most of our employers, they pay their employees through their bank account. What I would advise people to do, when your money comes to your bank account, have a standard deduction with your bank, whether it's your commercial bank or your credit union, and have them every month remove whatever you want them to remove into your savings account. Because that is how I do it as well. So my workplace would send my money to my commercial bank, but every month on the 28th of the month, the commercial bank will remove it from my checking account and send it straight into my savings. Now, another thing, sometimes when we are seeing the money, it is just so easy for us to go and have a card and to touch it. Have your savings account and do not have access to it via the ATM. So you can ask your financial institution, do not give you access to your savings through ATM. So you'll have access to your checking account, your daily account. If you need to go and remove money from that saving account, you're going to have to inconvenience yourself, go and stand in the line to get that money. So almost like we do not want to do that. So we'll be like, I will do without it. I will stay without it. So that is one little tip in terms of savings, direct deduction. So before you see it, before you get your salary, it is already, as your salary hit, it is already gone to your savings account. I know it is not easy because people have a lot of expenses and things are so expensive, but we have to try and we have to budget and we have to keep focus on what it is we want to achieve. So for example, if your goal is, I would really like to purchase a piece of land in Dominica, or I'd really like to build. Another thing is, if it's $500 you're going to pay every month towards that land, start now. So start putting that $500 aside to your savings, even if you haven't gotten that land yet. But you have identified $500 going towards the land, so start doing it all now. And then the last point I would like to put out there for those people who are interested in building, I see we're building in a whole reverse way. We get our land and we put our architect have that house for us, and it costs X amount of dollars. And then we go to the financial institution and we ask them for $500,000, only to find out when they do the calculation of your salary and your commitments, you are unable to get $500,000. So now you cannot build that house. What I would like to encourage people to do, based on your present salary, go to your financial institution, let them do the calculation when they take into consideration your commitments. Let them do the calculation and let them tell you your max you can get is $250,000. Some banks wouldn't give you a loan in excess of 40%. Some has increased it to 45. Some of them have even gone on to 50%. So you need to find out what your percentage range is. So if they tell you, when we do your calculations, you cannot get, and based on your salary, your income, you cannot get more than $250,000 as a mortgage to build a house. You have to now keep your building math and not the other way around. You don't go building a 3-bedroom, 4-bedroom, 3-bathroom house and trying to get finances for it. Try to find out what it is you can afford first, and then build a house based on what you can afford. Remember that the biggest house is not the most happy home, because there are some people with small houses and it's very cozy home, comfortable relationships, and that is what that matters. It's not the size of the house. So even if you see your neighbor with a very big house and that's where you have your land, cut your cloth to suit you. Live within your means, because pay
And we see that
for the
Sherman, happen all the
longest.
time. If you look at some areas where building is taking place, one house it may be smaller, the next one is bigger, and the next one bigger. So you're basically competing with your neighbor to get a bigger house, and you're not comfortable in
And
that.
I would really like,
Are you there, Shima? We're breaking up in a minute.
but I'm there. And that is what I want to leave with people. Do not live your life trying to impress people. We have our children. Yes, we probably try to give each of them a bedroom, especially if you have a male, a female. So we try to
Mhm.
give each of them a bedroom. But if you have 2 girls and you're a single parent, you do 2 bedrooms, put your 2 girls in a room, and you have your own bedroom and live within your means. So we have to try to live within our means. Don't try to impress, because we will be paying mortgage, most of us. If we start, and most of us, we do not start at 20. So say if we start our mortgage at 30 years, we'll have a 30-year mortgage. You realize we pay mortgage until we retire.
Mhm.
So that is a bill we have until we retire. So you want to make it as manageable as possible, because you have to live, you have to vive, you have to celebrate, you have to go out, you need to have vacation, you have to take your children out. You cannot be choking yourself paying a mortgage for 30 years at the max and cannot live a decent life. It's almost like you're working in vain. So we're really hoping that people will participate. The people from Portsmouth next week, Thursday, the 12th, 6:30, come to the Central Cooperative Credit Union building. Come interact with us, ask us questions, tell us what you would like to see us do as financial institutions and as insurance companies, and just tune in and participate. So this is it. So we have launched Financial Information Month, Matt. And so we
Mhm.
really just want to use this month to do as much as we can to educate people. Remember, wealth and resilience. So financial resilience, we must put something aside. We have to invest, no matter how small it is. Invest for your retirement, because you cannot totally depend on what Social Security is going to give you. It might not be enough, and we're hoping that will be healthier. It might not be enough. So have an account, have a member's retirement account, save your money. If you have a downstairs, finish up your downstairs, use it as an income generating property. So do things where you can legally earn additional income. So thank you, Matt and Q95. Thank you to the
Thank you.
listeners. Thank you to all my Financial Information Month partners. We really welcome that you're on board with ECCB, and we're looking forward to a great Financial Information Month 2023.
Thank you, Sherma. Thank you. We're looking forward to seeing you sometime in the near future. Thank you.
No
Thank you.
problemo. Take care.
Bye bye. We're just having a
Bye there.
conversation with Sherma John from the ECCB on financial